Anyone invested right now who's not making money is licking their wounds. Some are regrouping, some are exiting. Hello, this is the Arcadia Economic Silver Fix, and I'm Vince Lanci. It's 10:31 Monday. You'll be seeing this at 1 p.m. Let's get going. We have a special report, special edition for you this morning. We are in sell season, and nowhere is it more felt than in the mining industry. Now, sell season, which is really tax loss season. And I say it's sell season, but it's also buy season if you're short. But during sell season, you get liquidation of shares for one reason. People want their money back. They may want their money back due to poor fund performance. They may need their money back due to poor performance in another investment, forcing them to liquidate winners to solve the problem. But they need their money back. One thing is certain, in a year where interest rates have climbed to 5.25%, making money is both harder to do and harder to keep. In times like these, good assets get unfairly sold due to financial risk, not business risk. Put another way, the world is too leveraged, and as that leverage shrinks, those with the least amount of actual capital are forced to capitulate. I'm reminded of Warren Buffett's phrase about when the tide goes out, we see who's naked. Anyone invested right now who's not making money is licking their wounds. Some are regrouping, some are exiting. In past years, you would have been able to double down. Money was easy to get. Those days are ending. Money is expensive now. Therefore, you either manage risk or risk manages you. Now, why am I saying this? First off, Goldfix knows a small fund that played gold on the short side, gold futures, got taken out in the rally a couple weeks ago. However, this fund was so small, it was just collateral damage in the rally we had last month, due in no small part to China closing the arb by taking delivery. So we chalked it up to the usual fund blow-up. Nothing special. We didn't even report on it. But it came during sell season, or more appropriately, in this fund's case, liquidation season. They were buying as they were covering. If you are an investment vehicle specializing in miners, you have had an even rougher year. This makes you vulnerable to redemptions at the end of every quarter. And that vulnerability grows as the year goes on. So if you're a short bullion player, you're losing money this year. If you're a long mining player, you're losing money this year. And that's what we're going to talk about now. In a capitulation event, which we may be in right now, as investors sell everything not tied down either due to poor performance or a need for a cash infusion, those investments get liquidated before year end. Therefore, this is a good time for investors to consider buying shares of mines in which they already like the business. However, there should be no expectations of a hard and fast rally after this is all done. I want to be a little bit more specific for you now. What you are looking for is a pristine entry into a 10-year hold that will grow over time. This is why you must pick a business whose operations you trust. Liquidations that we're going through right now can certainly continue into the new year. And as rates stay high, you can also see these company stocks continue to languish. But the price of the stock is not the business. If you trust the management, you start to buy the company. Now, why am I saying all this? I'm not a mining person. I am a stock person now. I have been told by two independent sources that two investment entities in the precious metal space may be getting hit with large redemptions. My own reconnaissance after this suggests it's true. These are relatively small funds, but if a small one is getting redemptions right now, you can bet a larger one has also been getting at least some redemptions. There is a possible capitulation moment coming. It may have already come, but this could be one of those generational opportunities that the kids like to talk about. So all you have to ask yourself is, do you like the company? This is not a time to buy the worst house on the block because it's the cheapest. This is a time to buy the best house on the block because it is cheap. When money flows back into these assets, it will be quality buyers first. The selling that we have seen has been a result of people throwing in the towel all year on mining stocks, not necessarily individuals. Investment funds come in chunks. So at the end of every quarter, they get redemptions. I want my money back. I don't like the fund, which is fine. But there are people who want to sell in an even worse way that are being financially hurt in other areas. And those people will sell a little bit more aggressively. And I think we may be seeing that now. The rally in gold and silver recently didn't really do much to help those miners. And that's probably because there was supply right above the market being offered into it. So there are redemptions in the market right now. The redemption should end by December 31st. Time to start picking your spots if you're looking for an entry for a 10-year hold. Now, when we find out more, we'll tell you, but we do have a couple names that we will not share because of the confidentiality that we've promised the sources.
So obviously that's a topic that I know has been on a lot of people's minds with the way the miners have performed in the last year and a half, and appreciate that Vince was digging into this and sharing this today, and wanted to get a little more insight. So brought him back on and have a few questions to ask him to dig into some of the specifics of what's going on. And now we will head over to that. All right, so we are back here with Vince Lanci. And Vince, I appreciate that you made a little extra time, because I thought it would be good to get some clarification on some of these things that you're seeing, especially with some funds doing some redemptions. And perhaps to start with, can you give us any indication of the size of the funds? And is that something that likely, even outside of these funds, that you're aware of that is happening elsewhere? And perhaps we can start there.
Well, there's a lot that I can't say, and that's for the right reasons. But there are some things that I can't say, and I'm happy to come back because it's the Arcadia community. Okay, how big? Let's just say both funds that I know of are under $1 billion being run, under $1 billion. So, and they're more than 250 million. So that's your size, between 250 million and $1 billion. I mean, I'm just going to give you that type of an answer. That's the answer that I can give you. They're typical of the industry. One fund is typical of the industry, meaning they just own miners. That's what they do. Another fund might have some more complex strategies, like they may be long copper and long silver, but short gold. I don't know. But they have more flexibility in their investment. So that's the size of the funds. Yeah.
And can you put that in context with some of the funds that you look at, especially in the mining space, of the size of those relative to what else is out there?
Oh, I love to say that I'm an expert in this, but I'm not an expert in how much size or capital is allocated in the mining itself. I think your audience would know that better than me. But I look at these funds not necessarily compared to other funds. I look at these funds as symptomatic of a problem in a community. Now, I don't mean the mining community. I mean in the investment community in general. I think as interest rates have climbed over the last year, what used to be free money is not free anymore. So now I guess it kind of dovetails into why they're selling. Investors start to redeem things that they're making money in, and then when they do that, because they need money, and then when they do that, they start to redeem funds that they're not making money in to harvest tax losses. So with regards to how big they are relative, $5 billion funds will trade gold and buy 5,000 contracts, just to do it. That's how they play. Mining is really tricky. I don't know. I mean, if you're talking about mining shares, and I know that we are, a significant portion of this is mining shares, you're not talking about, trading. You're talking about investing. You're talking about funds that sell themselves or promote themselves as, long-term owners. And so that means the people that own these have invested in these funds probably have owned them for years. I know that, put it this way, I can't tell you how big the funds are that compete with them, but I can tell you that in their niche, they're pretty well known. Now, I wouldn't say they're a household name, but I know them, and I'm not a mining person. So maybe in the mining community, they'd be like, oh yeah, I know who they are. So that's basically it. But so they're big families of funds. And that's why I'm concerned. So maybe you have one fund that's not so big in a big company. So maybe there's other funds that are going to liquidate. So you have to be careful of a cascading effect to the bigger funds.
Okay, and did you have any feel for whether this was tax loss selling or more along the lines of a change in the view of the underlying fundamentals and an investment decision?
Yeah, I have no idea definitively, but I can give you a nice framework to handicap that. I believe, and I can't approve this, but I think your viewers, our viewers, I should say, because this is Silverfix, right? Thank you for having me on. Should have a good idea of this. There's been selling for the last 6 months. I mean, the mining markets, especially the smaller miners, have done very poorly relative to the metal itself. And if you believe, as I do, that there's been selling there has been, because the market hasn't rallied for the last 6 months, and you believe, as I do now, that there's been selling by redeeming funds for the last 6 months, then you would say what's happening now is a continuation of what happened last quarter and the quarter before that. And that is people getting out of the space because they're not happy with their performance. Now, that's what happened over the last 6 months, in my opinion. What's happened in these last 30 days? Well, that's where I think you might have a combination effect. You have this whole, I'm not happy with miners, they're getting out, right? But you also have the other factor, that's the performance one. The other factor, which I'm not familiar with, I'm familiar with it. I'm not privy to what their reason is, but it's either one of two other reasons. One, we're making money in other things, and we need to sell these for tax losses. I personally, although I have no evidence, don't think it's that. I think it's based on the location of the funds. I think it's geographic location of the funds. I think they have investors that have lost money in other assets and are liquidating in multiple different areas, not just mining. You know what I mean? I think they're just taking it on the chin. Maybe they bought Apple on the highs, that type of stuff. So I will say that, a big portion of this malaise that we've had for the last 6 months, speaking as a person who understands markets, not miners specifically, has been a function of the slow bleed of people saying, I'm done, I want to get out, I'm done, whatever the reason, and whatever the catalyst is, someone has been sitting on mining shares. Maybe there's a legit reason for it. I don't think so, but people lose patience. We all complain about it. We all just say, I'm getting beat up every day. Well, some people are getting beat up every day, and they're getting beat up long Apple, and they're getting beat up long U.S. bonds. I mean, the U.S. bond rally makes people liquidate other things. So that's it. I think this last 30 days has not been mining related. I think it has been we need our cash related. That's what I think.
Okay, and that brings me to the next question. I know you had a couple charts that can speak to this, but obviously one of the things that the people in the mining sector wonder, and I think it'd be good to get your perspective to whatever degree possible here, but are we close to a bottom? Is this reached capitulation? We've been wondering that over the past, many times over the past year and a half, but is there anything based on what you're looking at that could indicate whether we've reached that point or where we may be right now?
For the last, say, 48 hours, I've been looking at the holdings of the two funds and wondering, is there an opportunity there? And I haven't decided on that yet. But part of the analysis was not knowing much about the fundamentals. I need to know the management in order to buy these companies. I looked at what you're looking at there, and I'll make it a little bit bigger for you, for everyone. And I pulled up a monthly chart just to get a really 10,000 foot up picture. And I looked at it from a monthly point of view from silver on the left versus the silver junior miners, and start on the side where it has the yellow arrows, that half of it. In 2020, silver made a significant low. So did the junior miners. Fine. In 2021, silver made a significant high. So did the junior miners. Fine. I'm good with that, right? Okay. Then between 2021's high and today, you make a higher low in silver, and then you kind of bounce off of it. And that's the one where we had all the Indian buying coming in last year, right? And then you bounce off of it, and we're in sell season, the end of sell season. I don't know where we are anymore, but I know that we're not in a normal situation. But silver kind of, balances out. Now you go over to the miners between the high of 2021 and the low in silver of 2020, say December 2022, you have a low. But if you look at the last 6 months, the silver junior miner ETF is a new low. It's a new low. So I kind of mark those off a little bit. So if you look over here on the right-hand side, it's like we made a low, and now we made another low that's below this intermediate low. Meanwhile, silver went from here to here. Silver went from $18, give or take, to 22 and change on a bad day. And miners have gone from, $8 to $8, basically. So technically, everyone will tell you this looks sick, right? Technically, that's what everyone will tell you. And it may be sick for another 6 months in general, forgetting the whole seasonality of the metals. But once you know the reason, at least one reason for the selling, and you know it's because people need money, not because the companies are poorly run, then you make a decision. Am I going to buy this house, or am I going to wait a while? So I'll use technicals if I get in as a trigger, as a tactical thing. But you find a good mining company, once you do that, that's the work that I need to do. Once you do that, you're just like, okay, fine. I don't care about the worst house on the block that's getting hammered. I want the best house on the block that's getting less hammered. And there's several reasons for that. You don't go shopping for the cheapest buy now. You go shopping for the surest thing. Because when the money comes back into miners, and it will if energy costs stay low, among other reasons, people are going to buy quality first. So the big money is going to come back and buy quality first. Now, yeah, you can buy the little guys and hope they get taken over, right? And there's nothing wrong with that. However, if you're going to hold something for 10 years, you want to buy something that's really good and pretty cheap, as opposed to, I don't know what the heck they do and is really cheap. So that's where I am in my process right now. I hope that helps.
Okay, and last thing I wanted to cover, obviously you've been talking about how we went through sell season, we're approaching buy season.
Right.
I believe you were referring more to the metals than the miners, but just to put that in context, where we stand on that, and if you see those two segments differently.
Yeah. I don't, and I'll tell you what happened. Before this year, like clockwork, I wasn't sure exactly of the precise date, but the last quarter is when liquidation comes in. So it starts in September, as the last quarter starts. It starts in September, October, and then it will accelerate into November, typically, and then it will stop sometime around Thanksgiving. That was like my signpost. Thanksgiving is because it's a holiday. People start to flatten their positions out before the holiday, and then the buy recommendations come out sometime between after Thanksgiving and before New Year's, and so they kind of trickle out, or they get leaked out. So that works. So typically there's three sections. It's sell season, which is what I call it, right? And there's buy season, and in the middle it's a corridor. It's an ante room. I don't know. There's an overlap in there somewhere. And normally I say, feels good, but I don't want to buy it. Speaking as a trader, feels good, but it's not the deadline yet. It feels good, okay, and then I'll just start to nibble. You start to nibble. It's like, say I want to be long 5 contracts, right? I'll buy one because it might be buy season. I'll buy two. You start to buy in over time, not necessarily on price, but you start buying in over time. This year screwed me up though, right? This year the market went down to 1830, and I was ecstatic. I was like, gold goes down to 1830. I'm like, this is great. And I said this to subscribers. I'm like, gold goes down to 1830, and look at silver. Silver's not doing well, but it's not getting oversold like gold is. I'm like, this is great. This is sell season. This is capitulation. And now, ideally, the market just kind of bounces around for a couple of weeks and waits, and then the recommendations come out. So you have, like, historically, I always have time to get in. I have time to think about it. But the war started. The Israeli-Hamas war started, and we had like a 1830, 1930. And I was like, well, that doesn't make sense. I mean, it makes sense in terms of the geopolitical risk. But the market gets up to 2000. I go, well, I guess this is buy season, right? So I'm like, I guess this is buy season now. I'm not long. I want to be long. And now I'm hoping for a pullback, right? I'm hoping for a pullback because I think there will be buying coming in, but I'm nervous because all this buying came in well before it was supposed to. And so I said, maybe I missed the boat on this year, right? And then, but people are talking, constantly hitting my feed saying, miners really are struggling this year. What's going on with them? And I've floated some ideas out there, just half-assed. Not anything I believe, but maybe there's some sort of fear of nationalization. Or let's say I'm a Canadian mining company with exposure in Latin America, and I'm worried about the Latin American country demanding more cost. Maybe the miners are being punished for that risk. I don't know, right? But that's what I speculated. And then I get this news, 2 days ago, and I say, well, there you have it. There's your answer. It's still sell season. I'm wrong. So is it sell season in silver? You have to look at it that way. Because if the miners are getting hammered, then there are some Looney Tunes people out there getting short because the miners suck too. I'm going to sell silver and buy the miners. There are people out there I used to do that, right? I'm going to sell gold and buy the miners. And of course, that's why you lose money. So I think I should just go back to the beginning. The beginning is we're in the ante room between buy season and between sell season and buy season. And I was thinking that, okay, maybe buy season came a little early because of the war, and because of the pending government shutdown. But you know what? This information about the miners makes me say, nope, we're okay. I mean, maybe I want to buy gold at this price. Maybe I want to buy silver at this price. But it says to me like there's more selling coming in miners. So there's a bifurcation there in terms of flows, though not necessarily in seasonality.
Alrighty, well, that makes sense. And again, we're here on Monday, November 13th. So seems like we're getting closer to that point, and obviously just a month and a half left in the year. So looking forward to potentially a nice buy season to end out things with gold up on the year still, silver down about $2, but quite a choppy year it's been. And in either case, appreciate you being with us each Monday to help dig through some of these things and provide a little clarity. And that said, we will wrap up for today, but thanks again for this week's report. Vince Lanci's Silver Fix, and Vince, we'll look forward to hearing what you have for us next week.
Thank you. There's something that you asked me off air that I think you wanted me to talk about here for your listeners. Do you remember you were asking me about what region the miners were? Do you want me to talk about that? Yeah, the follow-up that you were, what part of the world? Well, they're diversified internationally, but the concentration is Canada and Australia. That's the concentration. So I haven't drilled it down any deeper than that. But so it completely makes sense with what's going on in the Canadian miners. Anyway, so thank you for having me, and I'm glad to be here.
Well, appreciate that, Vince, and we will see you again next week.